first thing I'm going to point out, and I'll open this up a bit, is first of all, by now everyone here in the in the blueprint knows my edge. One of my edges, one of the key drivers of my edges, is the zero edge, right? The excess idea, and that is visually represented. If I take a pen here and I highlight or draw in areas of firm trading, let's say today, this is an area of firm trade. This is not an area of firm trade, right? If I look back to last week, this is an area of firm trade. You can see that in the volume profile. This single print on the European Cash Open is not. So when this market starts to move higher today, I need to look at what positioning and what liquidity tells me. And where is positioning and liquidity? It's last week. What is the most obvious point that the market is engaging with? This single print. So now, not only have I objectified my process and my view of the yen. My view of the yen is not, oh my God, they're intervening, I'm missing it, I'm gonna, buy max size before I even am like fully awake. No, my process is objective, and it's intentional, and it has rules. So now this is worth just bringing up the video, because now that you have context, here's that structure we were just looking at. We're up at the highs at 4965. That blueprint there is your European Cash Open sequence. We've just clashed with that 200 point of control up here. So this is basically the high of day on yen. Okay, so I've marked. This is where you really want to pay attention, and this is going to be the sort of the meat of this presentation. I pointed out to you this single print from the previous week, and I want you to pay attention to these indicators where I've written 03, 02, and then there's one down here where I've written 01. Those are marking that little dot, this little dot, and this little dot. The reason I want to mark those is because those are areas, again, where there was a singular liquid transaction within an area where liquidity was lacking. Therefore, that's the only area where the market can trade new trade. It has to repair that area. So initially, this is a situation where all I care about is the velocity changes and the positioning and like changes in this area. And you can see that as soon as it touches the 02 point, it gets vacuumed quickly through it, and then the market responds with a bid. Why does the market respond with a bid? Well, you can see that there's plenty of value down there. And these are the kind of functions that I want to have a better understanding of, so that when I'm dealing with a 50 lot, a 500 lot, a 1,000 lot, the confidence is the conviction is absolutely there. So over a period of, I want to say 30 minutes, the market shows, and if you see here, you can see it approaches the 01, which is the bottom of that single print, at least the bottom of that excess. So right here, you can see I've circled it, and it bounces, and now where my eye is basically on the what I call a mini auction. So this mini auction basically tells us that there's an accumulation of buyers that lifted the offer at market, and they're defending between that single print 02 and that single print 01. Quite literally single prints, little dots on a very low volume bar. So all I care about is if the market can't hold that 02, then we're looking for a move down into the next obvious point of excess, which is going to be obviously the very panicky impulse response into the European cash open. And this is the thing, is you can tell that the way that the European cash open looks on a true form chart, true form liquidity analysis, it's absolute garbage. That is not an intervention in my view. And even if it is, that liquidity has to get repaired. And if you're looking on Twitter now and some of the stuff I shared on Discord, a lot of people are starting to get a bit hesitant looking at it going, I'm not sure that's exactly what we think it is. So yeah, just some really sort of technical, in-depth analysis here that I think is really what you're here to do. You're not here to be a sensationalist and talk about the headline every day and try and figure out when you're supposed to be there for the big blip. You're supposed to be developing an awareness of how markets function. Because, for example, I'll give you guys a real world example. I was out to dinner with one of my friends who works as a, just a tech guy at Bloomberg. He wasn't talking about anything current. He was actually talking about his time at Goldman back in the day. And when I say back in the day, I'm talking about 2-3 years ago. But anyway, he was at Goldman and he was basically building tools for traders. And he told me that there was a day where the traders had worked out a pattern in gold where, for whatever reason, gold would move really and actually this wasn't the futures market, this was a different spot market, but they figured that a large buyer would come in at a certain time for a few days, and it would then trigger other buyers who were clearly short term to then lift the offers at least 20-30 ticks. But as that pattern started to kind of become apparent, the Goldman traders were able to say, okay, well, why not just sell against those small positions and make the market, essentially. So the reason I tell you this story is because we think that everyone looks at the news and says, oh my god, the intervention, it's got to happen. They're going to come in and say that the yen needs to be below 140 again or whatever, and that they've bought however many FX to swap the USD, and then it's going to fly up. But in reality, what's more realistic is that every day funds, professionals, technicians are looking at these markets going, okay, well, how can we use our skills and tactics to kind of make this market here? So you want to be on the right side of that, and you want to be looking at it in a way that actually has an edge rather than just some kind of hopeful